Hi everyone, Chris here over at Williams & Co Trading. It's Thursday 17th of January. I'm just coming to you just to run over the latest trade alert that's gone up in the trade room. Now I know some of you, well a lot of you work full time and you use the trade alerts because you don't have very much time to kind of spare. But for those of you that do have time, whether it's after work in the evenings or whether you are trading full time, I just want to explain the strategy behind this trade alert. So the trade alert is for a trade to go long the New Zealand dollar versus the US dollar. Okay, also known as the Kiwi versus the dollar. So we're going to be going long, which means we want to take a position to buy this pair. So it means that we're buying New Zealand dollar and selling the US dollar. Okay. For those of you that are new here, the type of analysis I use is called Elliott wave analysis. Elliott wave analysis essentially is you count legs of a trend and then you count legs on the correction. So a trend will have 5 legs, which we count just with numbers 1, 2, 3, 4, 5. Corrections are usually in 3 legs or 3 waves. They can get a little bit more complex though, so I'm not going to go too much into it at the moment. But if we just take a look at the 4-hour chart, that's this one over here on the left. I'm just going to zoom out a little bit, so we can see if you have a look at these red numbers. I'm seeing on the 4-hour chart 5 waves up. Okay, so what this means to me, once I see 5 wave up, is that we're in an uptrend. So I expect to see 3 back down in a correction, and then we'll continue higher with another 5. Okay. Now each of these red waves has a number of smaller waves inside it. Okay, so I don't want to confuse too many of you, but basically the red wave count has got smaller waves inside it. Wave 1 will have 5, wave 2 is a correction, so that'll have 3, wave 3 has 5, wave 4 is a correction, so that has 3 waves, and then the last wave 5 has got 5 subwaves. Okay, so anything that's in the direction of the trend is going to be in 5 waves. Okay, so if I just draw it out here, just so you know what I'm talking about, this has got 5 smaller waves inside it, and then this has 3. This has got 5, this has got 3, and this has got 5, okay? And then again on the larger scale, we can see a big correction here, so this is in 3 waves. Okay, so now we've covered that, I just want to discuss this most recent move here for this red wave 1 and then down into red wave 2. Okay, so obviously I'm looking for another 5 waves to send us higher. You know, and we want to get long and ride the waves, you know, right up to our targets. So red wave 1, because it's in the direction of the trend, as we've seen with the as discussed with the other red wave 1 before, it's going to have 5 smaller waves inside it. Okay, so if you take a look at the chart on the right, I've zoomed in onto the hourly chart and you can see it a little bit closer and in a little bit more detail. So we're seeing red wave 1, which is this one here on the 4-hour, okay, which is this here on the 1-hour. Okay, so I've labelled in black the smaller waves that are inside it. Okay, so as you can see, red wave 1, it's got 5 small waves, also known as subwaves. Okay, so we've got 5 subwaves, which is in for those of you that have been following for a while, you might recognise this pattern is a leading diagonal pattern. Is essentially where your 5-wave move to the upside is in sort of a contracting wedge pattern. Yeah, as you can see, the trend line at the top, trend line at the bottom, show that it's a wedge formation. Okay. We then look for a 3-wave correction, which we label ABC, which you can see we tested trendline support, then made a new high, and then we've had a strong move to the downside for wave C. Okay, and this is called a flat correction. Okay, I don't want to baffle too many new guys with all this kind of jargon, but this is essentially why we are taking this trade. Okay, based on a number of factors, one of them being the wave count, that we've had 5 up and 3 down, essentially. Another point I want to make is that we use Fibonacci retracements, and also known as a fib retracement. So we use this tool to measure how far a correction comes back. So we take it from the bottom, from the start of a trend, to the top, the end of a trend, which we've got here, where there's black wave 5. And then it measures Fibonacci numbers. Now Fibonacci is just it's a mathematical sequence. They're very specific numbers, but a lot of traders follow them, so it's important to note them. But we use them all the time, so you'll see them on the technical analysis everywhere. So I've included two of the two popular fib numbers, which is 38.2% and 50%. And all that means is that from the highs, this has pulled back 38.2% of this length. Yeah, 50% would be halfway back. Okay, so we're in the area of two important fib levels. I do prefer a wave 2 to come a little bit deeper. However, on this occasion we are close enough to the 50%, and my wave count, I'm fairly confident in my wave count that this is correct, and that is a flat correction. For those that don't know, flat correction is just where wave B makes a new high. Okay, the usual corrections we'll get will be straight down, bit of sideways action, straight down again, whereas the flat comes up to a new high and then we keep going lower. Okay, so usually the last leg is really strong. As you can see, wave C really strong here. Okay, so I'm expecting us to bounce. We're in the area. I've took the length of wave A and projected it from wave B, and it's a 261 fib, which is essentially the maximum point where a flat correction can get to. Okay, so when we measure flat corrections, we want to see how long wave C is compared to wave A. So we take the length of wave A, project it from the start of wave, the end of wave B, and we put our fib levels in, which are usually 100%, 1618, and 2618. Any higher than that, I'm not really comfortable, and it's probably not a flat. We're probably looking at something different. Okay, so if we do come lower than this, and we start breaking below the 50, I'm not so confident in this. Basically, this wave count is pretty clear to me, and if we start breaking down, very strongly, I'm pretty confident that it's wrong. Okay, so it's at very, very important levels at the moment. We come much lower than 67. We probably want to probably want to get out of the trade. So I'm gonna keep stops reasonably wide, just because if we do take it at 67, I don't want us to take a full 2% loss. So if you want to keep stops tight, you can do. Just I'm not sure on taking a full size position on this one. Personally, I'm just going to keep my stops further away, which will force me to take a smaller size position. And then when we're around the 67 area, I can weigh it up, because we've got a bit of room to move before we actually do hit our stops. Okay, so I'm going to be placing stops probably just below this low, because I know that we've got the 50% fib here. We've got this 261. We've got this trend line, which you can see clearer on the 4 hour from those highs, which we broke out of. We could come and retest that as well. That's an option. Okay, so I just wanted to kind of highlight the reasons why I would take this trade. I know a lot of you just kind of want the notifications and tell me what to do, Chris, and where to put my stops and where the targets are, and it's as simple as that. But for those of you interested, you want to learn a little bit, and you're kind of looking at the technical analysis page and thinking, what on earth is this guy drawing everywhere? This at least gives you a little bit of background anyway. I do have a new web page I've just put up, which will be emailed out to everyone that's new. I'll share it in the chat room now for those guys who've been with us for a while. Essentially just goes over the basics of Elliott Wave. As I've just discussed, that the trend is in 5, the corrections are in 3. It's mainly the basics of it, so you can get a good understanding of what you're actually looking at on the charts. And I'll do as many videos as I can to kind of try and explain stuff as well. So that's it from me. Take a look in the trade room where all the specific details will be. You might very well be watching this late in the evening, so you've probably already got the trade on. But you know, you learn something new every day. So hopefully this was useful. All right, guys. Cheers. I'll speak to you soon, and I'll see you in the chat room. Cheers. Bye.